Here I will try and explain how do you leverage from the fund utilizations. Say for example, you're looking at I'll just take an example of 25,000 for individual investors, and I'll gradually come to investors who might be prop desk traders or private wealth managers or fund managers gradually as I go on with this presentation. But I am trying to focus a little bit here on what might happen with individuals who might be trading with a much smaller amount. So if you take the technique of 25,000 as an investment, where you are spreading it over 7 days, your investment would be around 3,500 per day. And say you are willing to only take a risk of $2,000 per stock. So let's also make this to 2,000. Sorry. So you are looking at, say for example, you're looking at a $25 stock. You are basically probably buying 80 shares, and if this $25 only when it gets to zero, at that point you lose 2,000. So this is all about zero technique, loss technique, which is very safe. But at the same time, you also need to have sufficient number of recommendations to compensate for this type of an ROI, which is like 26.2% on target price strategy, or if you use automation, which will be around 15% annually. And if you're looking at 25,000 here, you're looking at 105%, which means you're utilizing your funds efficiently. You would notice that your 25,000 investment has already, because of the fast rotation, you have already invested around 22,500 repeatedly, which already gave you around $506 as an ROI. So having said that, you can discuss with your financial advisors, or you can make that decision yourself, because we are not an advisory company. We basically can only give you recommendations, which could be, in your case, in this case, it could be 30th recommendations per month, which means you are looking at around 2 recommendations per day, with a spread of this scenario, which has been explained earlier. But this scenario, as I have said, on a bull market condition, on a bear market conditions, or an average market conditions, it has been seen that 30% of the stocks, they settle within 0 to 1 day. But as the market gets bull, this percentage can even go up to 40 to 50%. So it's a phenomenal ROI capabilities when the markets are very bull. But when the markets are bear, it doesn't mean that we are not making money. We are still making 26% a year, which is very good when it comes to investments made in this strategy versus the money which you would have kept on your bank account giving you 0% return. So having said that, let's take a look at $25,000 folks may need 2 recommendations per day, 38 a month, with $2,000 risk factor, which I have said, which will hardly happen, with that zero loss will hardly happen, can expect around $6,500 or 26% by the end of the year from 25,000. So if I change it to 50,000, you might need more recommendations. Keeping $2,000 as a risk, you would need 4 recommendations per day, which might be 75 recommendations a month. And if you are doing that, your percentage will still remain the same, but your absolute amount would be around 13,100 if you go based on target price. So feel free to get in touch with me. I will try and show for 100,000 what is the expected profit, which would be for 100,000 you will be making around 26,000, which is around same 26%. But your number of recommendations you per day might be 7 if you're taking a low risk. But if you increase the risk potential here, say for example you want to spread it over say 4 days and you want to take a risk of $3,000 from 100,000, you'll need little 175 recommendations a month, roughly around 8 recommendations a day. But that will take on the same basis, because this is more or less static for a certain period of time, and this is what's the average is at this point. But you are looking at 45% ROI, so which is significant. So you will notice that if you are willing to take little bit on the side in terms of, okay, I want to spread it out in say 5 days instead of 4 days, and I'm looking at around $3,000 as a potential risk, I'll probably need 7 recommendations, 140 recommendations a month, you are looking at 36%. So these are proven numbers, but you can always test it out as you use this service. You will notice that this is the type of spread you would be getting. It is recommended that you maintain a consistent amount of investment so that you are not getting into a situation where you are blocking your capital for a long time. You're evenly spreading it out. And secondly, this $3,000, say for example, if I put in $3,000 here for a $25 stock, you are only buying 120 shares in that scenario. So as said, these stocks which get scanned over a period of time, they have a very high capital market utilization. I mean, working capital onto these stocks. These are very highly, they have very high market capital on it. Their volume is very good. So it's very unlikely that this 120 shares which you are requesting would be partially filled, or you will get into a case situation of liquidation, because you are controlling your risk to a very low level. What you are relying on is the number of recommendations. So members who join this club would take advantage of low risk. If you take advantage of Interactive Brokers, then your commission would be also very low, which I will show it to you. Usually if the stocks are less than 120 shares, you are probably paying around $2.10 for this round trip commission if your number of shares are less than 120. But that again depends from broker to broker. But what you need to rely on is number of recommendations, which I had been successfully demonstrating in my past presentations with breakouts. So with breakout information and this technique, even individual investors with 100,000, spreading it over 5 days, taking a risk of 3,000 per share, which will never be zero, would probably be looking at around 36% ROI at the end of 11 months. Why I put it as 11 months? Because I don't do this every day, because it's a very tedious work for us to generate reports and all those type of things. We tend to have a 1 month break for enhancing and doing optimization on our algorithms and predictive model, and at the same time we want to enjoy our vacation period too. So even if you take a 11-month average, you are looking at 36% ROI, which is phenomenal.